Hello, dear students. Let's add value to your knowledge account today. I'm Dr. Bharati Sunil. Welcome to today's topic, Introduction to Accounting. Today, I will explain you what is accounting. Accounting is a system that identifies. So, what it identifies in any business, you can find two types of transactions. Okay, financial transactions and non-financial transactions. As you all know that accounting is considering only financial transactions like purchasing of goods, payment of salaries, payment of interest, okay, and selling of machinery. Only financial transactions will identify in our business. Next, records. So whatever the transactions relating to finance we have identified, all those financial transactions we will enter in our books. Okay, so how you will enter in our books? We will enter in a chronological order. Means, say for example, if our financial year is starting from April 1st, then we'll record all the transactions from April 1st onwards, right? April 1st, April 2nd, April 3rd, like that, right? Next, whatever the transactions we are recording in our books, what is our intention here? We want to do that particular recording and the next process, and we want to communicate. So, what type of information we want to communicate? To whom we want to communicate? We want to communicate that information to the stakeholders of the company. Okay, who are the stakeholders who are having some connectivity with our company, right? So they can be owners of the business, they can be management, employees, customers, government, bankers, creditors, etc., right? So what information they want to communicate? They want to communicate relevant information. Means they want to give only the information that is very much required to others. So relevant information only they want to communicate. All the relevant things they doesn't want to include in this accounting. So only relevant information which is totally reliable, right? The guessing figures are not communicated. Only the reliable data, reliable transactions, whatever are recorded in our books are communicated, right? And next to this information, whatever we are communicating, that information will be used to make comparison, right? What comparison we will make? Say, for example, if you take the example of any business, like say we can take LG or Samsung, right? So they are having many products, right? So for example, Samsung TV is there, Samsung refrigerator is there, Samsung AC is there, right? So they will make comparison of what the products they are used in their business and how their sales are affected, right? So they can make comparison between two or three different products, or they can make comparison of the same business. Means, say for example, if you take only Samsung refrigerators, they want to make a comparison of their previous years with the present years. Okay, so whatever the information we are communicating, that will be used to make comparison about what activities, about our nation's business activities. Okay, is it clear? So what is accounting? Accounting is a system that identifies only financial transactions, and all those financial transactions will be recorded in books, right? So what are those books are called? Books of accounts, right? So, and what is the information they have recorded in the books that will be communicated, right? So that will be communicated. What type of information will be recorded or communicated? Only relevant information, reliable information, and this information is used to make comparison about business activities, whether with the other same type of business or with the previous years of business. Yeah, now we'll go to definition of accounting, right? Here, according to Smith and Ashburn, accounting is the science of recording and classifying business transactions and events, primarily of financial character. What we have discussed now, we will consider only financial transactions. So how will record and classify? We are having some procedures, right? So basing on the procedures only, we will record and classify our business transactions. So what is recording? Here, the recording of transactions means we are having some procedures like journal. Journal means in this, we will take financial transactions like, say, for example, purchasing of furniture. So if you take purchasing of furniture transaction, in this, what we are purchasing? We are purchasing furniture. Okay. So for purchasing of this furniture, what we are paying? We are paying cash, right? So what are involved here? Furniture receipt is involved and payment of cash is involved, right? So to record this particular event, there is some signs of recording, means there is some procedure. We have to follow only the procedure. Is called writing journal entries. Okay. So we will record in the form of journal entries, and we will classify that business transaction. So how we will classify? Say for example, here we took purchase of furniture. So what are the two things that are happened here? Payment, purchasing of furniture means we have bought furniture, means furniture is coming into the business, and what is going on? Cash is going on. So two accounts are involved. What is the first one? Furniture account, and the second one, cash account. So this journal entry, whatever we have written now, that will be taken into that particular two accounts. One is furniture account, the other one is cash account. Okay, is it clear? So what is accounting? Accounting is a science of recording and classifying business transactions and events. Means we have to follow only those particular procedures in recording or classifying. So that is why it is mentioned as science of recording and classifying, right? Next, and the art of making significant summaries. So after recording these transactions and classifying into different accounts, what we'll do, we'll make significant summaries. Summaries means here we'll after taking this particular transactions into our business, we'll prepare journal entries and we'll prepare ledger accounts. Ledger accounts means what? Classifying. Okay. After classifying from ledger accounts, we will take balances and we'll prepare trial balance. Okay. From the trial balance, we'll make summaries. Okay. Summary means here what? Trading account, profit and loss account, and balance sheet. Okay. So why we'll prepare this trading account and profit and loss account? Trading account and profit and loss account are prepared to know whether our company is making profits or losses. To know about our profitability, we want to prepare trading account and profit and loss account. And so next we'll prepare balance sheet. What is balance sheet? To know about our financial position, means what are our liabilities, what are our assets. Okay, we'll prepare balance sheet. So what summaries? Whatever we have prepared as trading account, P&L account, and balance sheet, this we will use to make analysis, and this analysis will help us to make interpretations. Okay, these interpretations will help management to take decisions. Okay, say for example, if the net profit percentage is decreasing, or sales amount is increasing, but at the same time costs of making products are also increasing, what are the actions to be taken? That can be possible only through these interpretations. Is it clear? So interpretations of the transactions and events, and they will be communicated. What is communicated? The results of the business will be communicated to persons to whom we will communicate, who are involved with the business. Okay, they can be customers, they can be suppliers, they can be bankers. So they will take this information to make decisions, right? Say for example, if you take the information is required by investors. Investors will make a decision whether they can continue their investments or they can withdraw their investments. Okay, in the same way, bankers also, after seeing this analysis or interpretation, they will also decide whether they can lend to that particular company in future or not. In the same way, creditors also will decide whether they can sell to that particular company in future or not. Okay, so this accounting will help stakeholders to take decisions. Employees will see whether they can continue in this particular company for their future betterment or to seek for other opportunities can be decided only through accounting. Like this, different stakeholders will go into this particular accounting results, and based on that, they will form their judgments. Is it clear? This is about our today's topic, accounting and definition of accounting. That's all for today, but learning never stops. Thanks for watching this video. Please like, comment, and subscribe and share to your friends. Thank you.